Hello and welcome to Business at 9. I'm Shivani Gharat and we have with us my colleague Jude Sunit. Now, US markets is what we are speaking about immediately in Business at 9. Of course, US equities have opened lower with rising Treasury yields, persistent inflation concerns and elevated oil prices weighing on the investor sentiment. Semiconductor stocks are also coming under pressure, dragging the broader market lower. The S&P 500 is down 0.5%. The Nasdaq has fallen 1.1%, while the Dow Jones is lower by 191 points in early trade. We have Mitali with more details.
Rightly mentioned, so US markets, they have seen a weak opening for today's session with selling pressure visible across these stocks and specifically the technology stocks. If you see Dow Jones, it's down about 0.22%, while the S&P 500 is lower by 0.6%. Nasdaq is bearing the brunt of the sell-off with decline seen more than about 1.2%, and Nasdaq 100 is also declining with a sharp decline seen of more than 1.6%. The key pressure point is the crude, with Brent trading at around $91 per barrel and WTI above $84 amid the continuing tensions coming in from Iran. And there's a fresh update from US Donald Trump, the US President Donald Trump as well. Trump says no talks or conversations are currently taking place or even scheduled with Iran. He also says that the naval blockade remains in full effect, with stressing that the Strait of Hormuz is open as well as operating. And that is an important signal for the markets because uncertainty around Iran and the flow of the oil through Hormuz that still remains a very big risk for the Indian markets. Also, surge in oil is stroking the inflation concerns that is feeding into the bond market. If you see the US 30-year bond yields, they have touched its highest level in more than 2 decades. So as of now, higher yields as well as the higher crude weighing on the US markets, and we'll see how that rolls out going ahead.
Right, shifting focus to US industrial numbers next. The American industrial production rose in July but came in slightly below expectations, this even as factory output has matched forecasts. Now, capacity utilization also came in exactly in line with estimates. The data gives markets a fresh reading on the health of the US manufacturing sector and will be closely watched for signals on the strength of economic activity. But Shibani, back home in India, markets have been subjected to a rather tepid Tuesday, you'd reckon?
Absolutely. So let's quickly look at how the markets fared today. The Nifty closed near 24,150 mark. Mid-cap lagged while small caps relatively outperformed. IT and realty stocks corrected while the auto and healthcare lent support. Tata Motors, PV and Asian Paints were the top losers in Nifty. Today, my colleague Sneh is here with more details.
Well, yes, yet another tepid day for the market, and it's been a tepid Tuesday in terms of the Nifty expiry pressure that we've seen play out on the market. For the entire day, we've been under pressure, and towards the end, we saw 0.5% cut coming in on the Nifty 50, and in fact, we even slipped below the 24,200 mark, barely held on to 24,150. The cut has been to the tune of 132 points at the index level, so that's on the Nifty 50. Sensex too was under pressure by about 0.6%. You had the Nifty Bank that was lower by another 0.5%. So the cut over there was also quite steep. The broader trend, however, was a mixed trend because while you had the mid-cap index that was under pressure by 0.4%, the Nifty small cap was higher by 0.2%, and that is where a little bit of resilience was visible in the market. The VIX that spiked about 3 to 3.5% at the beginning of the day has slightly got softened by the end of the day. Sectorally, it was a mixed bag coming in because while on one hand you had Nifty IT, Realty, PSU banks, FMCG, metal banks, they were under pressure. The biggest cut in Nifty IT being driven lower by Emphasis, LTM, Persistent, Infosys, Wipro. All of the large cap names were heavily under pressure. On the other hand, you had good moves coming in the Nifty Defense Index, led higher by Paras Defense, that was locked in 10% upper circuit. Zen Technologies, Dynamatic Tech, Data Patterns, all of these stocks have done well. The move in Nifty Defense was followed by good moves in media, auto, oil and gas, with pharma being absolutely flat. Some of the oil and gas names, the upstream names like MRPL, ONGC, Chennai Petro did well after we saw Brent reclaiming $91 per barrel. So that's the kind of move we've seen over there. Another basket of stocks in focus was a bunch of block deals, QIPs, Paytm, Netweb Tech, all of those were in focus. The capital market plays were in focus. Sharp cuts coming in on the BSE, MCX, Grow, all of them were under pressure as well. So this was the basket of stocks to watch out for in trade. Lots of brokerage action also coming in, price target increases, decreases, upgrades, downgrades coming in. A bunch of stocks were in focus. focus on the back of that as well. Welspun Living being one of them, very good move coming in, a hike coming in from Nuvama over there. Other than that, if I take a look at the broader end of the market, the tilt towards the declines, PTC Industries, SBI Cards, Inox Wind, Oberoi Realty, these were under pressure, while Jyoti CNC did very well on the back of the ECMS allocation coming in. Sirma, Accutas were some other stocks in focus. Tube Investment, GSK Pharma, ATG, all of them were in focus. Lastly, the Tata Sons AGM has been adjourned due to lack of quorum, and this was another reason why the existing pressure on Tata stocks got slightly elevated. You had Tata Motors, Tata Steel, Tata Communication, TCS, Tata Elxsi, Tata Consumer. All of these stocks were under pressure, and this is how we ended the day with a 0.5% cut on the Nifty.
And speaking of that Tata Sons AGM that's now been adjourned as the race to appoint N. Chandrasekaran's successor continues, Tata Sons today, as we have been reporting, has adjourned its annual general meeting due to the lack of the required quorum. My colleague Anurag Joshi, who's been tracking the story for days now, joins us from what he's picking up from his sources.
The annual general meeting of Tata Sons has been adjourned due to a lack of quorum. The quorum of Tata Sons could not be met as the joint representative of the Sir Dorabji Tata Trust and Sir Ratan Tata Trust were not present at the meeting. Sir Dorabji Trust and Sir Ratan Tata Trust are the majority shareholders of Tata Sons, and they own almost 52% equity stake. Together, the Tata Trust owns 66% equity stake in Tata Sons. The Tata Sons board will meet to decide about the next date for the AGM of the firm. The restrictions imposed by the Charity Commissioner on Sir Ratan Tata Trust in May have been a reason why both Sir Dorabji Tata Trust and Sir Ratan Tata Trust were not able to appoint a nominee for the annual general meeting today. And this was following the Charity Commissioner's order in May that has barred Sir Ratan Tata Trust and from holding meetings and also taking any key decisions pending and the completion of an investigation. One of the key resolutions for today's AGM, which has been adjourned, was to seek reappointment of N. Chandrasekaran as a director of Tata Sons. Last week, N. Chandrasekaran had announced his decision not to seek a reappointment as the chairman of Tata Sons once his current term ends in February 2027.
The Income Tax Department has launched a nationwide verification drive into suspicious foreign remittances. Around 394 entities and 36 professionals are under scanner for allegedly sending large sums abroad despite limited business activity. The probe is also looking at professionals who certify the taxability of these transactions, with 117 entities located in sensitive land border states also being examined. We have Kuldeep with more details.
Well, the Income Tax Department has launched a nationwide verification exercise into suspicious foreign remittances. This exercise follows ground intelligence indicating significant overseas remittances by entities with little or no reported business activity. The Central Board of Direct Taxes has issued an official statement, and it further stated that a nationwide network of entities engaged in remitting funds abroad was uncovered during a search operation conducted on a group of fictitious charitable trusts involved in providing accommodation entries against bogus donation and contributions. It also stated that preliminary ground verification revealed that the entities making these remittances were either non-filers or were filing income tax returns showing very small turnovers. The tax department has emphasized that accountants issuing certificates in Form 15CV and Form 146 are expected to exercise due care, diligence and professional judgment, and they should properly examine the underlying transactions and relevant facts before certifying the remittances, as these certifications play an important role in maintaining trust in the system. The department has stated that the investigation in this matter is underway.
Well, moving on to India's raging E20 debate, a day after the country's chief economic advisor, Ananta Nageswaran, made a case for bringing back E10 petrol for older vehicles. Sources have told ET Now that supplying E10 fuel at retail outlets would in fact be a rather difficult prospect for the government. My colleague Prakash joins in with the latest on these details.
Well, that's an important development coming in as government sources suggest that providing E10 petrol at retail outlets would be practically difficult as it is likely to pose significant logistical challenges for oil marketing companies. Sources suggest that offering multiple grades of blended petrol at retail outlets would increase the financial burden on oil marketing companies as managing separate storage, transportation and pipeline infrastructure would attract additional cost, and this is going to be very difficult for oil marketing companies to manage different grades of petrol at retail outlets. Along with that, you are aware of the fact that the Chief Economic Advisor has proposes reintroducing E10 petrol at retail outlets alongside E20 petrol, especially for older vehicles amid ethanol-related controversy. However, government sources are suggesting that this is not going to be easy. In fact, it is likely to pose significant logistic challenges for oil marketing companies along with financial burden. Sources also suggest that providing different grades of petrol could also lead to malpractices. In fact, the idea of offering different grades of petrol at retail outlets was widely discussed during the launch of E20. Various factors were taken into account and the practical and logistical challenges were discussed extensively. However, sources have reiterated that E20 petrol is completely safe and was implemented after years of testing. Back to you.
Now, Semicon India 2026 is set to return for its third edition from September 17 to 19 at Yashabhumi in Dwarka. Prime Minister Narendra Modi will inaugurate the event, reaffirming the government's commitment to India's semiconductor push. Secretary of Ministry of Electronics and Information Technology S. Krishnan says 5-6 semiconductor facilities will start production by the end of this year. Let's listen in.
The government's support for the semiconductor industry would continue, and in that spirit, the cabinet has also approved Semicon 2.0, and the notification for the scheme is expected to be issued very shortly. And there are 6 major pillars, as you're aware. One, of course, is the design of chips. The second is machines and materials, which form the key part of the ecosystem of semiconductors. There's also, as was done in the last scheme, setting up of more fabs in the country and further strengthening the ATMP and OSAT industry, and particularly taking it to advanced packaging, which is an important priority for us. In addition, we will support research and development, the movement towards more advanced nodes and movement into more niche areas like silicon photonics, power semiconductors and so on. Those would be an important element as part of the research and development which will take place. It will build on the kind of work which MeitY has already been supporting as part of its agenda. And of course, it will also leverage funding available under ANRF and the RDI schemes of the Government of India.
Moving on, the government says Meta is taking a more cautious approach to unlawful content, including CSAM, following discussions with its officials. Now, government sources say there will be no safe harbor protection for Meta on CSAM-related content, while emphasizing that authorities are only exercising powers under the existing legal framework. My colleague Sumita joins in with the latest on these developments.
That's right. Government sources have given us some understanding of their discussions with Meta officials. And in fact, what we've been given to understand is that government has seen action in sensitivity related to CSAM content on Meta and its platforms. And in fact, government officials also told ET Now that they have sort of observed that Meta is being cautious with respect to CSAM content. And of course, it has also filtered out unlawful content. The government made it clear to Meta during multiple of its meetings with India's IT Secretary Secretary and IT Minister that there won't be safe harbor available, which is currently available to the platform if they flout norms that are related to harmful content and CSAM issues, so whether it's individuals or platforms. And in fact, we were given to understand that this aspect and this issue is going to be watched and tracked. In fact, on content moderation, we were given to understand that these teams, they need to have sensitivity to India's context, because remember, the government is not really trying to censor any content, and the intent is to make sure that social platforms do not create a situation which are adverse to India's social circumstances and social milieu. And this is something that has also been expressed by liberal democracies in the West. So cultural context and how to keep that in mind is important. And of course, then there are reasonable restrictions to the freedom of speech that are applicable. On synthetically generated information, we were given to understand that it's a matter of the right of users to know whether a content piece is synthetic or not. Remember, this is coming in after government summoned Meta's global team earlier in August. And of course, Joel Kaplan, Meta's global government affairs president, along with other officials from the India team, they met with India's IT Secretary, Mr. S. Krishnan, and India's IT Minister, Ashwini Vaishnav. And of course, he was summoned over practices that are followed by Meta, including a brief restriction to Prime Minister Modi's video on Facebook. So of course, after that, Meta issued an apology, and they said that the content was removed in error. And of course, there will be proper safeguards that will be maintained, especially when it comes to profiles of personalities, important personalities.
Thanks, Subhata, for getting us those details. It is time for us to slip into a very short break at this point in time on Business at 9. We'll be right back in a very short time.
Welcome back. You're watching Business at 9 with Shibani in our Mumbai studios and myself, Jude, joining in from Chennai. In some news that's just coming in, the Maharashtra Food and Drug Administration, or the FDA, we're given to understand, has suspended the licenses of 8 hotels, restaurants and other food establishments in the city of Mumbai over food and safety hygiene violations. In fact, the FDA, we're told, inspected several hotels, restaurants and eateries in the city and issued improvement notices to 6 of them, while also suspending some food licenses. In fact, we're now being joined by my colleague Akanksha, who has been tracking these stories over the last few weeks. Now, Akanksha, what's going on in Mumbai? Food licenses there being suspended by the FDA?
That's right. Maharashtra FDA has now suspended the licenses of 8 food establishments across the state over food safety and hygiene violations. Now, the action comes after the FDA inspected 65 hotels, restaurants, and even dhabas across Maharashtra. Now, one of the establishments facing action is Otters Club in Bandra, which is actually so popular, where the FDA found food safety violations and has suspended its license as well. Now, in another case, Punjab Sindh Dairy's regular paneer was also found to be analog paneer. Now, remember that analog paneer has been banned by FDA across Maharashtra for 1 year. Meanwhile, the FDA has also inspected a Zepto facility in Chembur. Here, the regulator has flagged violations related to temperature control. But that's not all. The FDA has also stepped up its action against banned food products. During 11 raids across Maharashtra, the regulator has also seized gutka and pan masala worth around 1 crore. Now, remember, gutka, pan masala is also currently banned across the state. Now, in these cases, 10 people have been arrested. And apart from the license suspensions, the FDA has also issued improvement notices to 40 food establishments. So overall, the Maharashtra FDA has intensified the food safety checks across hotels, restaurants, dhabas and food facilities, with action being taken wherever violations have been found.
Right. Thank you so much, Akanksha, for this update. Now, the government has announced National Sports Awards with 17 spokespersons selected for the prestigious Arjuna Award this year. The list features athletes from disciplines including athletics, badminton, boxing, chess, hockey, kabaddi, shooting, para sports, with key big names being Vidit Gujarati and Divya Deshmukh for chess and Gayatri Gopichand for badminton. However, notably, there is no recipient for the Major Dhyan Chand Khel Ratna Award this year, which is not been announced yet. The Arjuna Award has also been given in the Lifetime Achievement category to footballer I. Arumaniyagam Well, that's the news coming in from the Arjuna Awards this year. With that, it's time for us.
And with that, it's a wrap on Business at 9 from Shibani and myself. Thank you so much for watching. But for the moment, it's goodbye from us.